welcome back to another episode. So, we're actually going to be talking about Microsoft in today's episode. So, Microsoft has actually been growing their revenues over the past 3 years and over the past 4 quarters, and yet still the stocks have been coming down, and it really has to do with what's happening on the market. And so what we're going to do is look at the fundamentals to see exactly what Microsoft is doing and how they are going about doing it. So first of all, the revenues. Microsoft actually earns revenues two ways. So they earn revenues from actually products that they have and the services that they offer. So the products would actually comprise of their Xbox gaming consoles, and their services would comprise of the Office 365 and their cloud-based services, so the Azure and those other types of services. So as it comes down to revenue, so over the quarters, Microsoft actually has increased their total revenues from $62 billion on December 2023 to actually $69 billion by December 2024. And there was actually a 6% increase from September to actually December. And on the year-over-year basis, they actually increased their revenues from $198 billion to $245 billion. And between 23 and 24, they actually increased their revenue by 15%. So as we break it down more, so their products actually has remained relatively stable over the past year, from $64.699 billion to $64.733 billion. And this actually was a downward from 2022's $72 billion. However, their product services actually increased from 125 billion in 2022 to 147 billion in 2023 and 180 billion by 2024. And over the quarters, they actually have increased their services from 43 billion in December 2023 to 44 billion by March, and then 50 billion by September, and $53 billion by December 2024. Now, the cost of their revenues has actually come down. So cost of their total cost of revenues actually declined from $19 billion to $18 billion by March, but it however increased again from September to December by 8% to close at $21 billion. And over the actual year, their total cost of revenue had also increased from 62 billion by December 2022 to 65 billion. That's 5% increase, and then 12% increase to $74 billion. So the cost that it would take them to acquire their products actually declined from 19 billion to 15 billion between 2022 and 2024, but the quarters actually had declined from 5 billion to actually $3 billion. So what really happened is that Microsoft had actually purchased OpenAI during the 2023-2024 year period. So they had actually purchased a 45% stake, and OpenAI is the creators of ChatGPT. So as we look further in the statement, you notice that the actual net profits has actually increased from 72 billion as of December 2022 to 88 billion by 2024. So that's 21% increase. And over the quarters, they actually had increased it from 21 billion in December 2023 to $24 billion by December 2024. And so as it stands right now, so Microsoft have been focusing a lot on services and less on their products. And so with the services, the Office 365 is actually a subscription based service. So whereas the previous Microsoft Office tools, you just pay a one flat fee and then that would be it. Now what they do is for the Office 365 they offer a monthly subscription so that you can pay for it. So any bugs, anything that needs fixing, they actually would be able to do so. Now as it comes down to the balance sheets now, so Microsoft's balance sheets over the quarter, they actually have been increasing their current assets. So the cash and cash equivalent increased by 3% between December and March to close at $19 billion, and then another 3.98% to end September at $20 billion. But it did decline between September and December to $17 billion, and this would have been just that the cash that they had available was actually used up in other areas of the business. And so the total current assets for Microsoft over the quarter has remained relatively stable. So $147 billion it has been over the 1 year period. However, over the quarter, the actual total current assets has increased from 74 billion to 159 billion dollars, and inventory has also declined from 3 billion to 1.2 billion dollars. Now, the total assets for Microsoft has seen significant increases. So the total assets for December for 2022 was 364 billion. By 2023 it was 411 billion. By 2024 it was 512 billion dollars. And over the actual quarters, it increased from 470 to 533 billion dollars over the 1 year period. And also the total current liabilities has been decreasing from $121 billion in December 2023 to $118 billion by March, and then $115 by September, and $108 by December 2024, while over the years it has however been increasing from 95 to 104 to 125, which would have suggested that the cash and cash equivalent would have been used to be clearing off debt and these other expenses that Microsoft would have undertaken over the period. So as we look to the cash flow statement right now, you'd have noticed that the net income, as we stated earlier, was actually at 21% increase over the previous year at $88 billion. So if you look at the net cash from operating, it increased by 35% to end at $118 billion over the year. And the financing net cash used in financing has decreased by 14%, while the actual net cash used in investing has increased by 328%. So what that really is showing is that when you're looking at the cash flow, it really just tells you how much cash is available in the business and where the money is going. So if you take a loan, that would add cash to the account. If you pay off a loan, that minuses cash. So that really is it. So when it comes down to actually evaluating the cash flow statement, you want to look at the cash and cash equivalent statement. So that is actually the most important part of the cash flow statement. So, and I learned this trick when I actually was younger back in college. I remember a lecturer said to me that if you're looking at the cash flow and the cash and cash equivalent is actually zero or negative, then just leave. So what I will tell you is, if you see that cash and cash equivalent statement account on the cash flow statement and it's actually negative or very low, run for the hills. Don't even bother consider investing in that company, because what that means is that the company is either going to be illiquid or insolvent very soon, and so it's only a matter of time before their actual worries will catch up with them. And you don't want to invest in a company that is struggling financially and cash wise. You want to have a company that can actually have money and can clear off certain debts and pay certain expenses as they arise. So with Microsoft having cash flow of about $18 billion, this shows that they are in a financially healthy state, so they can manage any short-term shocks or any beyond short-term unplanned market conditions that may actually happen. And so as we move from the cash flow into the ratios now, Microsoft actually has had very healthy current ratios. So the current ratios really is just a short-term ratios, and so it has been between 1.78 in 2022 to 0.97 in 2023, which showed that they actually had less funds available back in 2023, but by 2024 they actually had gotten it back up to the standards, which is about 1.27 to 1. So this would have meant that Microsoft was managing, so their assets would pretty much be able to cover the liabilities, as that's what the current ratios measure. So the amount of debt that Microsoft had borrowed was actually not, but so they actually reduced it from 2022 at 54% to 49% by 2023, and then it was even reduced further to 47.6% by 2024. And the debt to equity was, however, very high at 119% in 2022, 99.7% in 2023, and 90.766% in 2024. So Microsoft has realized that the debt was very high, and so this could have been one of the reasons why the actual cash and cash equivalent was decreased over the 23-24 period. So the return on assets for the quarter was actually a little lower at 4.6% for Q1, and then 4.5% for Q2, 4.6% for the third quarter, and then 4.0% for quarter 4. And the returns on equity, on the other hand, was at 9.1% for the first quarter, 8.6% for the second, 8.37% for the third, and 7.23% for the fourth quarter. So this would have showed that the returns have been fairly stable over the quarters, and so this would also have been a key fundamental into the actual health and safety of Microsoft. So Microsoft currently has about 7.4 billion shares outstanding. The current share price as at this March 31st was $371.84 per share. The market cap is about $2.7 trillion, and the net income is $88.136 billion. So these would have been actually included in the Microsoft evaluations, and so when you're evaluating the companies, you need to pay attention to these metrics and data. Now, the Microsoft actually has been increasing their dividends every year for the past 5 years. So it's currently at 83 cents a year ago it was 75 cents, and you can check the price in the dividend history over time. So all in all, is Microsoft a good buy? So based on the data that was presented here, the company is sound financially, and so the sell off that is essentially happening is actually just market wise and systemic, and so Microsoft is not immune to it. So as is stated right now, there is buying options. There is the probability of good buying options depending on the strategy that you would have implemented. Now, this is not financial advice, so I will not be recommending anyone to buy or sell any stock or company. What I do is just share my views, and if it's a company that I am investing in or I'm staying away from, then I will share my thoughts on that and my position on that company as well too, if I do have one. So that really is it. So thank you guys so much for tuning into this episode. I do hope that you had a good one. Feel free to give us a like or thumbs up or heart wherever you consume this material. Leave any comments down below. I love when you get in touch with me. And until next time, take care. Love you guys. Bye.